Good day. Ira Epstein of Linn and Associates with your SPDR ETF video for this Wednesday evening, and we are now on the 13th of May, 2020, about 6:50 p.m. Central Time. So a day of red behind me. And what really happened and set the market off is Fed Chair Powell's comments. Now, he was speaking before the Peterson Institute this morning, and he made it very clear that we are nowhere near out of the woods. He also said the Fed has the markets back. So, two things. But if you thought that things were getting better at any point in time, he spoke realistically. And the realistic part is there is a problem here in this market. The problem is that it all goes back to the COVID-19, the world economy, how the U.S. is doing, and the simple fact is Congress has to enact some fiscal programs. Now, we know Congress has been throwing money at everything, but we need to see stimulus programs. How are the cities going to survive? How are the states going to survive this? There's many unanswered questions, and it can't just be the Fed. It's got to be Congress that comes together with it, and of course with the president. So the market reacted to all that. Now, if we take a look at the technology sector, we've had breaks like this before. You can see how the market is set back. So this is not unusual. That's the first step. The second thing is we still have the pattern of higher lows and higher highs. And you haven't stepped out of that pattern since back here, literally in March. And that's when the market took off one more time. When I look at where the market's coming down to, you have the combination of support of the 100-day average in green, the 18-day average. What you don't want to see taken out is 88.08, and that would not start a bear move. It would negate the uptrend, but not necessarily begin a bear move in the market. And even if that were taken out, you got another bastion of support at 86.38, the 200-day moving average. So this is still in pretty good shape. In terms of Bollinger Band, well, we had run it, and now we've backed away from it. So it's still a resistance point, but what has happened, more important, is you lost the embedded reading. Now, embedded reading means that the slow stochastics kept the red and the blue lines over 80 for 3 or more days. When it's lost, unless it's regained immediately the next day, and you could, but it's going to be a real trick. I don't think it'll be done because you're so far under the 80 level that the market's going to go back to the support, and we're talking about it anyways, of the 18 and the 100-day average. I still expect that to happen. If the market tried to rally tomorrow and it kept this reading lost, I'd expect to see short sellers develop big time, looking for those numbers to still be hit. In the semiconductor area of the SMH, the 25 index, lower highs, lower lows. You went into a bear trend today. I know it doesn't look like it, it did it. Lower highs, lower lows. So now the question is, first support, the 200-day average, 128.45. If that gives ground, the next level of support comes in right here. So be a little cautious on this one. In the industrial sector, you now have a higher high, lower low. Where did you fall to? The Bollinger Bands, especially when you're going sideways, seem to capture the market and keep it in that area. You need to close 2 days in a row, in my opinion, under those numbers to say the market's a breakout to the downside. It didn't do that. It got as low as 58.50, and it closed within the bands at 59.05, and the band's 58.77. I think the shorts, if there were shorts, are covering there. You have an oversold market, not embedding bearish. In the energy sector, you're rolled. You've got lower highs. And if we look back here, this number's 36.12, and today's low in the market, 35.47. So you got lower highs, lower low. You closed under the 18-day average at 35.73. Therefore, it turned down. So the trend in this market has rolled. Don't be surprised if your market tries to get back to 32, 31. The bears are probably showing up right here. They're wrong if you get back over the 38, what is that, the 80 level? I believe it is, 38.80, and down you go. My eyes are working, I can't believe it. As we take a look at the QQQ, momentum's been lost. So a challenge of the 18-day average is a given. Could happen right on the opening, could happen after that. I do believe that what will happen, if you rally first, short sellers will show up trying to get back to this 18-day average. This momentum is a big event. And unless it were to be gained back, and I don't believe it's going to with that low of a reading of 67, this is what I call a short seller's dream. If the market first pops up, then I think they'll look for that 18-day average and they will hit the market. By the way, with the stop over the 228.10 zone. In the emerging market ETF, we pulled back to the 18-day average, but I want you to really concentrate on this picture right here. You have a market now that is stuck in this pipe, as I like to call it, and it's just winding up pressure. Momentum turned down. The bias on the close is down. The trend is up as the swing lines go. So this market, everything's not functioning, as I call that. In GLD, I'm looking at futures tonight up about $8 or $9 early on. Higher lows, higher highs, over the 18-day average, bias up, momentum up. No reason for this market, if it's going to go up, not to challenge the upper Bollinger Band at 163.25. You throw me wrong in that analysis if the market gets under 158.89. In the gold miners, you know, I was wondering yesterday, you had lost the embedded reading right here. Today you had that rally back, and to me this is the sucker play. Actually, this was on the 12th. And to me, you're going to that number, this 18-day average. Well, the 18-day average is 33.47. You got to 33.42, so it worked as I thought. The trend is, in terms of the swing line down, the bias is up and momentum is pointing down. Nothing is together on that chart. In TLT, you're still in a pattern of lower highs, lower lows. Each time you've hit the Bollinger Band, you've bounced away, as I would expect it would. Now you have divergence, big time. Momentum is trying to turn up, bias down, trend down. A lot of divergence on it. In FXE, the market is fighting at the 18-day average of closes. Trend down, bias down, and oversold, very oversold. To get bullish this market, if you were to get over 102.75, I would think the bulls buy over that number, stops under the most recent low, looking to see if they can get the market up to 103.45. So that's what I'm seeing there. Now, as you know, we put together a lot of brochures, some of them with our good friends at Modern Trader magazine. Some people like to try to figure out, how do you catch a falling knife? Well, some of the articles they have deal with that. One of them deals with rules for bottom fishers. Now, I am not a bottom fisher. I'm a trend trader, which means if the market's falling, it's probably been in a downtrend. Now, their rules are a little different. They're trying to catch, be it the upside. Look at natural gas. It's had one of these monstrous vertical moves. That is one of the rules they write about. So you might want to look at that. What's the money flow index? And you should be looking at it in the stock market, because money in, money out, where's it going? You always hear at the end of the week, here's where the funds, the ETFs are seeing money flows in, money flows out. And of course, Gann square of 9, been around forever. Once you understand it, you get a feel for where the market just might try to be heading. So how do you get this? It's really simple. You go to our website, and by the way, this is how the articles look. They're well written, all with commentary and graphs to explain how this all works. I use slow stochastics, that's relative strength. How do you optimize stops? You think I didn't train myself on that? I did. You have to, because traders are wrong. I know there are some traders that are the best traders in the world, and they're rarely wrong. I'm not one of them, so I have to have those stop orders. You go to our website, under the free offers, you'll see this and our other brochures. You can click up here to get there. It'll play it for you as well. With that, I'm Ira Epstein. You have yourself a good evening. I will see you all tomorrow.